Welcome back, ladies and gentlemen, and thank you for staying with us. My name is Anthony, and this is Financial Markets, where we look at the capital markets and money markets, in particular those of Uganda and East Africa, but as well. Now, today with me, I have a very special guest. He has been here before, and he's a financial analyst who works with, of course, SBG Securities, which is a subsidiary of course, Stanbic Holdings, that includes Stanbic Bank and the like, and they are specialized in, securities, helping people actually buy and sell. We last time talked about a company called Cipla, and we saw how it returned to profitability, and we saw how what went on with the company for the last financial year. They returned to profitability for the very first time. Today we are going to look at British American Tobacco as well as National Insurance Company. These two companies recently released their financial reports, and of course we are going to look at whether they were profitable or not. What do they have in store for their shareholders? Should we see these companies grow with time, given their financial results and the like? So we are going to talk about that and more with my guest, Mr. Kayemba Isaac. Please don't go anywhere. Mr. Kayemba, you're very welcome to the program.
And thank you for hosting me, as you have mentioned. My name is Isaac Kayemba, and I'm pleased to be here. Wow. Pleased to have this discussion.
How is life at SBG?
Life is fine. Life is fine, definitely.
Yeah, there's products you're working on at SBG, the app,
and the market will get to know as it gets developed, as it goes on and is launched.
Yeah. Before we go into the financial reports, maybe you can talk to us about securities.
Yes.
Why is it important for people, first and foremost, to trade securities, or especially in particular stocks? Why is it important, especially given the tough economic times? We are looking at all these companies and we want to attract people to invest in them. But people, of course, are skeptical because of the tough economic environment in which we are living. As you can see, the price inflation and so many other things around the country. Why should someone still invest in shares and stocks?
So first of all, as you have said, we all need to invest after saving. We all need to invest, and the stock market provides a vehicle for us to invest and have returns on our money. Yeah. So why is it important to invest in the stock market? The stock market provides assets with different return characteristics from the normal. Yeah. Let's say you have rentals. Yeah. You're earning rental income from those rentals, but when you buy stocks, you're earning a dividend, and capital gains could happen if the stock's price went up. You could also have capital gains, but on the tail end, you also have losses. That is also possible. But the stock market provides assets with different return characteristics from the normal investment vehicles. So it's a good initiative if you want to invest and grow your money.
Which kind of money in particular? People say, I earn this amount, I save some, I use some for my daily, activities, and maybe pay for insurance. What money should I invest in stocks to be safe? Is it money I've saved for long term? Money I'm saving for short term? Is it residual income that is just dormant? Which kind of money to be safe?
The best would be residual income that you do not need in the near term at the moment. You have to keep investing. Why? Because if you kept money aside, it keeps on losing value. And with the main topic right now and in the markets, inflation. Inflation is at a very high. It's at a very high rate right now at 6.3%. So it is important for you to have some money put away and invested in such vehicles. So at 6.3%, you would be losing quite a sizable amount of your money annually. So that's why it's important to have such vehicles for you to invest.
So now as SBG, how do you help me in terms of investment?
So as an investor, as SBG will help you create an account.
Okay.
So an SCD account. So you'll be able to buy or sell stocks that are listed on the Uganda Securities Exchange.
Yeah.
So we'll help you set up an account and also execute your trades when required. Yeah.
Wow, interesting. We'll get back to that later on. We always want to remind people and get to know why these things are important and people to get started. British American Tobacco, how did it perform?
So first of all, as an investor, so I would say there are three ways anyone could look at financial statements or an equity investment in particular. One, as an investor, a normal investor, yes. Then two, as an information motivated trader, yeah. So something has happened and you want to make a trade of it, yeah, and earn a return of it. And then there are hedgers. Hedging is trying to manage risk. If you have a position in a certain asset class, you try to create another position that is not correlated to the previous one, so that you can manage your risk. So in this case, if we are looking at BATU as investors, British American Tobacco Uganda, there are characteristics of a good stock that we look at. There are metrics that we have to be keen on and make sure we have those ones right. So I love to take a top-down approach. Top-down approach. Look at the company as a whole, its strategy, the economy in which it operates, and all such kinds of characteristics. Like from the top, then you can keep on drilling down till you reach the statements and say, yes, this company has a good strategy, they have good outlook for the future, but what exactly are they doing on the table? What are they bringing to the table?
Okay, now British American Tobacco last financial year, gross revenue 93, that is 162. I think billions?
162 billion.
Billion, yes, 162. And then the previous it had 93 billion.
So that is 162 billion is for the previous year.
Oh, okay.
2020 financial year, and 93 billion is for the most recent. So that is a very huge drop in revenue. And if you looked at their 5-year cumulative average growth rate, so that rate, cumulative average growth rate, it shows us how the company has been performing over a longer period of time. So it shows us, it puts into account compounding. So if you keep on investing and earning returns, there is a compounding aspect. So that's why that rate of return is very important. So they have a negative 10.6% cumulative average growth return. So that spells not so good for the company, because they are dropping in revenue generation, and this is quite a sizable drop in gross revenue. So they also indicate within this statement that they issued approximately 42% drop in gross revenue. So that doesn't spell well for the company. So as we keep on looking at such metrics, that's where we get indicators. Is this good company to invest into?
Now, you remember BAT had the price, I think 2019 or 2020, of 30,000 and it dropped drastically to 15,000. Could that be one of the attributes to this?
So at the time of the drop, they had released their half-year financials, if I might add. But usually price movements are not so attached to. There are also other factors that could have caused that. So I wouldn't specifically say that. But even then, so usually tobacco companies, are looked at as companies that are defensive. They keep earning revenue even in tough economic times. and they are able to generate cash flow. Yeah, though there's another angle to that. Yeah, people look at ESG these days, environmental, social, and governance, and tobacco use is not looked at as something that is good for people. So that's why people keep shunning away their adverts against smoking tobacco. So it's quite challenging for such an environment for a company to keep growing. And then, if I might add, the regulation from the government, the taxation policy around tobacco. So all those, that's why they include excise duty and value-added tax in their revenue line. So yeah, it reduced because their revenues also reduced.
Okay.
Yeah, so that excise duty is a key accounting line because as it's a tobacco company and regulation around it, you expect tax to be a very huge percentage of their revenue. Yeah, but a negative change in one, the stock price, and two, their gross revenue does not spell so well for the stock.
Moving down to the profits, total costs of operation didn't yield any much changes there, from 79 to 45, probably due to a lower, revenue as well there. Then, do you see the profit before tax as attractive as well?
So profits. So as a company, they have significantly tried to reduce costs. In line with the reduction in revenue. As you can see, finance costs and both operating costs are on a downward trend. And that's why they are able to maintain profitability. And 22.75%, I guess, net profit margin, is good for the company. It's quite impressive. It's quite impressive for a mature company to have such a margin, 22% net profit margin. So as a whole, there are some pros and cons. But there's a bad side and a good side when it comes to this statement.
Moving on to the balance sheets, their assets are compared to liabilities. How did you find that?
So their assets, we are seeing a reduction.
Yes, there's a reduction.
A significant reduction in assets. And their current assets. So this does not provide much detail, but we see that positive trend in assets they have. You see there is a very minimal amount of non-current liabilities and liabilities as a whole. So solvency and liquidity for the company looks good.
Okay. And then when we move to, of course, the cash flow, we're seeing a net of 210 basic and diluted earnings per share, and of course last year, the year before was 407.
So yes, when your revenue reduces, so that's definitely bound to happen. Your earnings per share will also reduce. So and investors usually look out for that line. The basic and diluted earnings per share. So investors look at that quite often, because it indicates what exactly they have for themselves at the end of the year. Because this is attributable to the shareholders and stakeholders in the company. So, and if we keep going down to the cash flow statement, we see they are still cash flow positive. We see, though there is a significant reduction, but they have 9 billion free cash flow at the end of the year. So there is still available cash to pay dividends, and they declared 209 shillings dividend as seen up there.
That's the highest dividend so far on the market. I think Women declared 54 or something.
Yes.
Is it because of their high share price or something?
No, not really. So as I told you, Tobacco companies are usually cash flow positive, so they generate companies, so people consume the tobacco. Yeah, even as others have a negative outlook, there are people that still consume the tobacco. So though the dividend is quite high, yeah, you have to measure it against the price, because if you were to buy the stock right now, yeah, to earn the dividend, you would get a minute 1.39% yield on your dividend. That's quite low. So it's quite low. So you look at the price and dividend and compare them. So, and even with metrics like its price to earnings, yeah, how does its stock price look like against those earnings? And we have a very huge 71x multiple on their price to earnings. So the price multiples, yeah, price to earnings, price to free cash flow, price to sales, yeah, both trailing and forwards, they give you an indication of how the price, yeah, if I'm to buy the stock at the moment as an investor, yeah, when after what time do I expect to get my money back? Yeah, because I'm buying it at a premium, at quite a high premium, yeah, for when you compare its stock price and the revenue they are generating. So you look at the price against the statements to inform your decision. Yes.
209 shillings per share with a share price of 15,000. I think it's not fair.
It's not fair.
It's not
quite.
It's quite.
You wouldn't say it's not fair.
Yes.
Because not every investor is going to buy at 15,000.
Oh.
There's a time it was quite low. So investors
maybe
that were in at that point
at lower price
have been. This stock has a history, yeah, of very good dividends. Yeah, even when you compare it against previous prices. So yes, the current price makes it look quite unfavorable, but then the investors that bought in at a later time, so for them it is still a nice stock. But if you wanted to buy right now, yeah, the price could be, quite high.
Yeah.
Though at 16x price to sales, so there are metrics you look at and see, should I take this decision, should I not? So that's why it's important for every investor that has decided to invest their money in the stock market. It's very important that you look at the company you're trying to buy, their strategy, their financial statements. Make your own research and compare those prices, those financial statements. Do they have good governance before you make a decision? Moving forward, do you think British American Tobacco in the next financial year is a promising company to invest in? So I wouldn't say. So I wouldn't want to give a direct opinion. So it puts someone in a corner. Yes. So that's why I was encouraging people to do their own research. Yeah. But it's it's not always doom and gloom. When you're looking at the statement, it's indicating results for that year, but you haven't looked at the previous years, and you don't know what's going to happen in the future. So that's why it's important for you to make your own assumptions, because I wouldn't want someone to base the investing decision on my own assumption. So was it a profitable company? Despite the reduction in revenue, 42%, was it still profitable? Did it make profits? Yes. As I have told you, they declared 22.7% net profit margin. So yeah, they were profitable. They were still profitable, despite the fact that their gross revenues reduced. So it's still making money as a company. Okay. And I would expect it to keep making money. Because the structure is good, the governance is good, and their parent company, British American Tobacco, so they have quite a huge network. Is there a way they can reduce the stock market? And even companies that are cross-listed from Kenya, they don't sell at such prices in our markets are based on demand and supply. Yeah, so it is not up to the company to decide to to reduce the price. Yeah, it is dependent on investor sentiment. Maybe the investors right now think the price should be at 15,000. So that is not up to the company. Prices are dependent on demand and supply in the stock, up to them.
Okay.
Yeah.
Wow, thank you very much. We are going to take a short break, but when we return as well with National Insurance Corporation and a couple of other, what advice you can give, to the public, in terms of, safety of these, monies that we are putting in these companies, and also in the turbulent times, we can look at the Kenyan Stock Exchange as well, as we are seeing, a drop in share price almost of every company and their indexes.
So, if I might intercept you there.
Yes.
So when you're looking at a stock price, it is a price at that point. Yeah, it might not reflect, or it does not reflect what happened 10 years ago. Yeah. So if I am an investor and I invested right now,
Yes.
I would encourage people not to look at current drops. Yeah, because the economy operates in a way that is cyclic. Today we are in a downward trend. Tomorrow we shall be in an upward trend.
Yeah.
So over a long period of time, there is gain over a long period of time. So as you keep receiving dividends from these companies, and also price changes also change your, because before you sell, you have not yet realized the loss.
Yeah.
But if you sell, then you realize the loss. So that's how the markets work. You might see downward trends and red everywhere, but depends on when you bought.
Yeah.
Yeah. And also it's important, very important, when you're looking at equities, to look at a period that's between 5 to 7 years. 5 to 7 years to 10 gives you quite a sizable amount of time to earn a significant return on your investment.
Yeah.
Yes.
All right, ladies and gentlemen, let's take a short break. We return with more from Mr. Kayemba Isaac, who is from SBD Securities as a financial analyst, breaking down some results of listed companies that actually released them. We'll be right back. Don't go anywhere.